Talk is on, where you receive good information for your mortgage needs, such as mortgage programs and foreclosure programs to help get you out of foreclosure. Stay tuned and hear what's coming your way.
And good evening. Welcome to Mortgage Talk. How you doing? This is Rick Montgomery. Man, glad to be here with you on a beautiful Thursday, man. I'm telling you, it's wonderful out here, man. And get a chance to talk with you about mortgages. Yeah. We've done quite a few shows on reverse mortgage part 2, because we did reverse mortgage 1 last week, and a really good turnout. Okay. So we are doing it on Speaker.com, and we're live on Speaker.com right now. And so we will be back on Speaker.com to do the other segment of the show. But for right now, we're on it today. This is my last talk on on reverse mortgage 2. We want you to get this, and we encourage you to go out and do research. Just do the type of research that you need to do to confirm the information that we're giving you, and to grasp a further understanding, helping you to stand firm in your square, because the reverse mortgage is an optional tool for you to use. We're not suggesting that you go use it. We're just suggesting that if you do decide to use it, at least have the fundamental basics of it packed down, that you have an understanding of it. So you cannot be confused or abused by someone who may try to, because you are educated, because Mortgage Talk believes an educated consumer is indeed the best customer, and that is what we promote. Okay, so let's get into it. Reverse Mortgage 2. Reverse Mortgage is a home equity conversion mortgage. Reverse Mortgage program is a home equity conversion mortgage. Now, it has the acronyms of HECM for homeowners. HECM, and you'll hear me refer to the acronyms throughout the show. But I want you to understand what they mean. The HECM means home equity conversion mortgage. That is reverse mortgage. We want you to be further educated before making a decision that this is the program for you. Throughout the show, I'm going to give you some optional programs that you can consider just as well. Now you have enough in your arsenal, enabling you to make some decisions, and some decisive decisions. Now, some of you, it may require you to look up some of these other options just to have a better clarity. I'm encouraging you to continue to listen to Mortgage Talk, because we have blogs out there that is talking about some of the programs that I'm going to be talking to you about in just a bit. And some of those programs have been updated. And so, of course, we update the blog too, allowing you to get the information. All you have to do is just go to blogtalkradio.com/Mortgage Talk 1. That's the number 1 symbol. And scroll down and choose the blog that'll work for you. Now, of course, my face is on there when you go there, but don't forget, we have over 580 blogs, and the Lighthouse, our favorite, the Lighthouse is on there too. So you may scroll and see Mortgage Talk. You see my name, and then you see the Lighthouse. That's us too. That was our older show, and we tried to update a little bit. This time we did it with my picture, saying, hey, welcome to the 2021st century. So That is our way of doing it, but you can still get some good information, okay? Got to move on. Question: what is a reverse mortgage? Glad you asked that question. First, it's a type of loan available only to homeowners at age 62 or older. The HECM is different from all other types of mortgages. Yes, it is. Homeowners have to live in a home as their primary residence. Is the first priority of qualifying for a reverse mortgage. It cannot be your investment property. You cannot buy it and stay in it for 6 months and then move out of it. If you do, then that loan will become due. Okay? Homeowners must continue to pay their property taxes and their homeowner's insurance and maintain the upkeep of the property, as well as have mortgage protection insurance. Okay? Mortgage protection insurance, I can't stress how very important that this is for you, Mr. or Mrs. Homeowner. You see, you have to upkeep the property because most properties are going to be paid for when you go to qualify for the reverse mortgage. Some of them will not, but the reverse mortgage itself, the funds that you would take out of that will pay off the property for you. So there'll be no more escrow if you have escrow. And when you pay it off in 30 days, you will receive the balance from your escrow. So you need to establish your own escrow account, which is a checking account. Reverse mortgage is going to go in 3 levels for you, or you can utilize all 3. The first level is you can have a line of credit, whereas you can write a check for what you need when you need it from the balance that you have from the reverse mortgage. You could get it in one lump sum and be satisfied. You can get it in a monthly payment where they pay you, which was make reverse mortgage program completely different from any other mortgage program out there. Or you can get all 3 in a combination. Let me explain. If you're going to have an interest-bearing account, and usually depends on the time of when you get this reverse mortgage, you could be on for the first installment of the taxes or the last installment in most cases. So you want to take the amount of the taxes and put that in the upfront money that you want to receive. Because you're going to add more to it. So whatever the tax is, you want to be able to pay the last installment, or if you're doing a reverse mortgage during the time that the first installment is almost due, then you want to take a 1 year of the tax put in up front. When you first bought the house, you had to pay homeowners insurance 1 year in advance. That's all that insurance companies will allow you to do, is to pay 1 year in advance. That's the maximum. So you want to take the 1 year of your insurance policy that you have and put that up front too, because you're going to pay that 1 year in advance out of that. Mortgage protection insurance is what's going to protect you while you're in the reverse mortgage. So you want to pay that policy up front too, 1 year in advance. It's a very inexpensive policy. And I'm going to explain it to you as we go along. But if you have any further questions, contact my office on that at 708-572-7855. Ask to speak to me, 708-572-7855 on reverse mortgage. See, it's not just for when you're doing reverse mortgage. It's there for when you have a loan, period, on your property or condominium. Mortgage protection insurance. Why would you not want to have it? Same reason. Why would you not want to have homeowners insurance? Wow. Got to move on. According to the 2013 study by the National Counselor on Aging, reverse mortgage may help seniors to pay daily living expenses, assist their growing adult children when they're in need, support their grandchildren throughout their trials and tribulations and happiness, and even provide them with a policy that will grow in value for them, a whole life policy or a universal whole life policy or index universal whole life policy. You heard of the thing $1 million babies. Some of you have. And what that is that this is where parents or grandparents take out an index universal life policy on a child that's about maybe 5 or 4 years of age. By the time they get to be 21 years old, the cash value in that policy will be $1 million. And they will be that $1 million baby because you just set your baby up to be a millionaire. All off of an index universal life policy. Isn't that something? It holds the highest interest return than what any bank can ever possibly give you. And it mimics the stock market. Your money is never invested in the stock market. But if the stock market happens to fall, you lose none of your investment incurred in the stock market, nor do you lose any interest earned. You keep all of that. And you'll get a bottom interest of 0.26%. Wow. That's better than what 0.1% that these banks give you, which is a ripoff. Wow. So you can come out on top with the index universal life policy or index fixed annuity. You can come out on top and you can take your child, and your child could be the next $1 million baby. But for right now, you can get a policy for your grandchildren, and that's probably one of the greatest gifts that you can give them. So when they turn to be 21 and 22 and 23 years of age, they have a nice little nest egg that is generating funds for them on a consistent level, and they could be encouraged to add money in that account because the more you add, the more it grows. Wow. Most importantly, reverse mortgage helps seniors to live a stressful-free life. They don't have to worry about their bills anymore or paying on bills. They don't have to worry about food because they can get food abundantly. And they don't have to worry about medication and sacrificing certain foods for medication because they'll be able to get their medication and pay whatever the high cost of that medication is. They'll be able to do so. Because, see, reverse mortgage will be added on to their Social Security or their pension or even both. And there's no taxes to be paid on reverse mortgage because the proceed is tax-free. Did you hear what I said? It's tax-free. Wow. In detail, reverse mortgage works by using a portion of your home equity to first pay off your existing mortgage. After paying off your existing mortgage, your reverse mortgage lender will pay you any remaining proceeds from the new loan. If the home is paid up front, paid first, paid free and clear, then it's just more money in your pocket on reverse mortgage. Now, reverse mortgage normally takes 50% of whatever your equity is. They can go up to 70% if need be, and that depends on the payoff of your loan, okay? So if they need to get a 60% just to have enough money to pay it off and be able to give you money for the reverse mortgage, they can do that, okay? And it can go up to those factors just as well. Just wanted to let you know, all right? Now, remember this. If you pass away if you pass away, the loan becomes due. That puts the pressure on your inheritance and your siblings or your children or whoever is executor of your estate. Your estate and family will have to pay the difference, pay back the reverse mortgage, or sell the property to pay the reverse mortgage, or let the home go and the reverse mortgage debt will be paid for free and clear. Those are kind of options that they have to make that decision on. But you, grandma, grandpa, are an educated consumer, the best customer. And you know that you worked so hard all your life to pay into this mortgage and have paid this house out free and clear, or almost paid free and clear, and you work your blood, sweat, and tears on. You deserve to do the reverse mortgage and have life much easier for you during your senior years. You deserve that. Not because you sacrificed enough. And you sacrificed throughout your children's life. This is not the time to sacrifice anymore. Your sacrifice is over. This is your time for you to live comfortably. And as an educated consumer, the best customer, you understand that you need mortgage protection. So if something were to happen to you, mortgage protection will pay the reverse mortgage out. The house is paid for free and clear. And mortgage protection will have money left over because you got the mortgage protection policy for the full value of the home. When the reverse mortgage lenders sent out the FHA appraiser and the appraiser property, you then went to my office, contact me at 708-572-7855 and says, send me some information on that mortgage protection. Rick, I like it. Sign me up. I trust you. Sign me up. And you paid your first yearly policy in advance. And then you took the average monthly cost and put it up because it's coming out of your monthly payment that you've been paid by the lender. Because remember now, you had all three options to choose from. A line of credit if needed, one lump sum, or on a monthly base, or on all three. And you decide that you had to do a few improvements. And so you took an X amount of dollars up front. You took the taxes up front. You took the 1 year homeowner's insurance up front. And you took the 1 year mortgage protection up front. And that was paid. Now you're receiving your monthly payments as you do. So now you can take a piece of that and like you looked at your bank statement, or not bank statement, but your escrow statement, and you know how much money was taken out of your monthly payment and put into escrow. And now you're able to do the same thing. And that's going to give you money to pay each and every year whenever your policy become due. Whenever that policy for that reverse mortgage come due, you're going to be able to make that payment. Whenever the taxes is due, you're going to be able to make that payment. If there's any homeowners improvement, if it's not covered under the homeowner's policy, then the money is right there in that reverse account. Man, isn't that wonderful? Isn't that beautiful? That's what reverse mortgage can do for you. Give you that protection. And reverse mortgage can even stop you from going into foreclosure. With your reverse mortgage policy, let me stop. With your mortgage protection policy, and something were to happen to your loan where you're in foreclosure and you need about $3,300 to reinstate and you don't have the money, you don't have to panic because your reverse mortgage policy is going to cover it for you. You'll be able to pull the money from your built up cash reserve and pay that amount and get your loan reinstated. See how wonderful reverse mortgage is for you? Man. And while it continues to generate interest accrued on the original loan. Wow. Man, reverse mortgage is great. Okay? Now your family don't have to worry if something happens to you, because there'll be enough money to give you a beautiful burial and funeral, and money left over that your will can determine who gets that amount or what amount that each individual may get. And your will also determine whom you're leaving the property to, because it's paid for free and clear. And now they can utilize the property to live in for that next generation, or you can sell the property and generate proceeds from the sale and put that into your account. So many options that you can do. So many options that you have under this flagship of reverse mortgage. Now, if something happens to you and the mortgage protection insurance covers, and it will cover the amount and pay off the reverse mortgage loan, you were able to live the life in comfort and freedom from what you wanted and reap the benefits of your hard-earned blood, sweat, and tear. Man. And on top of that, the property is paid free and clear because of the mortgage protection. It paid off the reverse mortgage loan, leaving a home for your heirs to do with it as they please, sell it, live in it, whichever is which. And that is indeed a smart way to protect your interests. Mortgage protection insurance. Got to move on. Remember to call my office at 708-572-7855. Ask me about it. Let me send you out some information. Let me show you how easy it is and so affordable, and get you signed up. So call my office, 708-577-0328. That's my direct line to me. Or you can call our office line at 708-572-7855. Okay? Is there a downside to this loan? Some say that there is. Others say it's just an operation of the loan. It's just the operation of the loan. But some believe that it is the downsides of the loan, of the reverse mortgage loan. You be the judge. The loan balance increases over a period of time as interest on the loan starts to add up. Okay? Accumulating as the home equity is being used, it is accumulating, eating away at the home equity. Fewer assets are available to leave to your inheritors as time ticks on. See why you need to call my office and get information on mortgage protection insurance? Just keep that in mind. You can still leave the home to your heirs, but they will have to repay the loan if you did not have that mortgage protection insurance. what process is taken for this loan? What process is taken for this loan? Well, there's 5 steps to this process, actuality. Step number 1 is application must be completed. And once the application is completed, the lender cannot incur any costs on your behalf at that stage until step 2 has been completed. So if step 1 is not completed, they can just start charge you. Now, what they can charge you is an application fee. They can do that. And they can charge you a processing fee. Now, they can do that too. Okay? So they can do those. The second step to reverse mortgage is that reverse mortgage, you have to see a reverse mortgage counselor before you can take that, apply for that reverse mortgage. You have to see a reverse mortgage counselor. Now, reverse mortgage counselor is a HUD counselor. And they want to talk to you about your selection of this program and to see what do you know about this program. And are you aware of how reverse mortgage works? Are you aware of what your responsibility of the upkeep of the property is? Upkeep of the property, cover your taxes, the county tax on the property, pay your homeowner's insurance 1 year in advance, and pay your mortgage protection insurance, keeping you protected and your family protected. So the third step is an appraisal comes out after step 2. When the counselor feels that you understand it, you'll get a certificate. So the third step is an appraisal. So the lender is going to send out a FHA certified appraiser. Okay. That FHA certified appraiser, he or she is also a FHA inspector. So they will be doing some inspection while appraising the house because they have that inspection report that's attached to the appraisal. That's just how it goes. Okay? The inspector is going to come out as an appraiser to assess the property, but he's also going to be looking for some hidden damages. And if he finds some, he's going to jot it down and put his estimate of what it would cost to get it fixed. So now that could mean that the homeowner who applied for the reverse mortgage may want to make certain adjustments to take out a little bit more upfront from the equity, allowing them to be able to meet some of those obligations and do those repairs that was found by the FHA appraiser. Okay? After that, you go to phase step 4, where the underwriter gathers the appraiser and any documents that the appraiser have and the copy of the contract agreement, etc. The appraiser gets that. The underwriter gets that along with the appraisal. And then the underwriter signs off. Once the underwriter signs off of the loan, after all steps has been made, then you go to close. And after the closing, oh well, you have your house free and clear. And you are living into the house of your dreams. So how does reverse mortgage loans get paid? How do they pay off the reverse mortgage loan? Glad you asked that question. How does reverse mortgage loans get paid? Well, reverse mortgage is a different program from other loan product program. Payment is not accomplished through monthly payments. Instead, it is repaid all at once at loan maturity. Loan maturity happens if you, the seller, decides to transfer the title to a family member or someone else. In other words, you sign a quitclaim deed. So you call that loan due. Loan maturity happens if you decide to transfer the title from your name to one of your inheritance name or sibling's name or child name. And if you do that, the loan will be called due. Loan maturity happens if you permanently leave the home for whatever the reason that you choose to. Then loan maturity exists and the loan will be called due. If you fail to keep the upkeep of the property under FHA guidelines, FHA does give you opportunities so you can take care of that. They will work with you. But if you still haven't done it in that reasonable time frame, then the loan will become due. Homeowners insurance. You are required to maintain it. I just told you how you can do it. Mortgage protection insurance. You need to have that in case something happens. That you don't leave all that burden on your children. And last but not least, homeowners insurance is paid up in a year advance. So because now when you go to next year, you'll be able to make your monthly payments to the insurance company. Whoever it is covering you for homeowners insurance. And you're still covered. Isn't that something? Wow. Now, there are some seniors out there that have been told, and they've listened to people that don't even know what they're talking about. They listen to people who sound like they know what they're saying, and they don't because they start off with, my friend I knew, or a friend of a friend knew someone that did reverse mortgage, and it didn't come out well for them. Oh my God, it's a big ripoff. So some seniors really believe that reverse mortgage is a ripoff. Answer to that question is no, it is not true. Reverse mortgage is not a ripoff. Well, my friend Jay told me, she told me that she does not know what she's talking about. And that's sad. Why would you listen to a plumber to tell you about reverse mortgage? Why would you listen to a realtor that's going to tell you about reverse mortgage when they do not engage into that program and have no training, knowledge of that program? Why would you listen to your brother-in-law who's a truck driver, and just because he claimed that his friend's mother got it and she got taken for everything, he does not know all of the intel of what happened in that situation, because nobody's going to open up that situation and explain it to you. It's too personal for that. They may tell you a little bit about it, but they're not going to tell you the whole contents of it. And what they do tell you is never going to expose that they were at fault. So you have not got the truth. The bottom line is that when you look at the so-called 100% of the truth that's been given to you by somebody who has no experience in the industry to even talk to you about reverse mortgage, when you break down the percentage, you find 95% of it is nothing but lies and opinionated lies based off of several people. And with the 5% left, you find 3% of that is that person's own opinion that's telling you about it. And the remaining 2% is the actual truth. Wow. See how much you got to dig out the truth? 95% of lies you got to go through. And then you got to go to 3% of somebody's own think they know it all personal opinion before you can get to the actual truth. Man. So reverse mortgage, my seniors, I love you. I'm 62. I love you. It's not a ripoff. That's a lie. Seniors has to be, there are seniors that was victims of scam artist contractors that talk fast. Yeah. And then try to talk them into using the reverse mortgage funds to pay for home improvement. And some of those home improvement could have been done with your homeowner's insurance. Now I'm talking to you now, seniors, especially my old school seniors. I love you, but you are the most stubborn of them all. You don't believe that you should use your insurance to cover what you've been paying all these years for them to cover. What's wrong with you? Because you were told in the past when you accomplished this, or your mother was told, and she was told by her mother of how they sold a policy to them, that if you use this insurance, it's going to go up on you. And they did put that fear factor in the 40s and in the 50s to black people. And they carried that over into the next generation that carried it over to your mom's generation. That if you use the insurance, it's going to go up. They're going to drop you. It's going to be hard for you to find another insurance company. And when you do, you're going to pay through the wazoo. Meanwhile, white folks has been using their insurance policy for years to have things fixed and never had that issue or problem. And so have other ethnic groups too. But some of my Southerner blacks, some of my down home black people who are now beautiful seniors, young people, beautiful young senior people, still have that stigma in their mind. My dad did before he passed away, that if you use your homeowner's insurance, your insurance gonna grow up. And they gonna drop you, which is a lie. If you have too many claims, you can and will be dropped. And if you go to the next insurance company with too many claims, then they will insure you, but your policy rate is going to be a little higher. Because you consider it a high risk. Why? Because you have filed several claims with the other insurance company. Not a claim. I said several claims. Okay? So, my seniors, the scam artists go to work that are contractors, and the scam artists go to work that are loan officers working for mortgage companies or banks, and they happen to hear that you may be a month or two behind, and they say, you know what, let's see, can we get you through reverse mortgage? Because you're ready to get the money, reinstate your loan because it's going to pay it off. So it's going to pay it off. And then you're going to be A-okay. And that's not how reverse mortgage works. You have to be current in order to qualify for the program. That's number one. So you want to get switched to another program. And more of your equity is gone and you didn't get no money out of the deal trying to save the home, but all you needed was mortgage protection insurance. And if you have mortgage protection insurance, then if you're 1 or 2 months or 3 months behind on your mortgage, it will cover it for you. Naturally, it depends on when you got it. You can't get it a month, but then go 3 months down, 3 months after you have the policy, it's not going to cover that. All of it. So like homeowners insurance, you got that when you first got the house, or you got that at this time, and maybe next year time, boom, you have this issue. Or you've gotten that 2 years ago through COVID-19, bang, shaboom, shapow, you got this issue. Now your mortgage protected insurance is going to cover you, and you still alive. Ain't that something? Because you can go into your cash reserve to pay for the arrears that you're down on that will reinstate you, and you don't even have to pay the loan back. You should always pay yourself back. It's always encouraged, but you don't even have to pay it back. Ain't that something? So reverse mortgage is a great protection for you from foreclosure. Call my office, 708-572-7855, 708-572-7855. Ask me about reverse mortgage. Get the policy. It's very inexpensive. Trust me, you'll need it. I'm not going to beg you to get it. I'm not twisting your arm to get it. I'm just letting you know what you need. And if you get what you need, you have the protection that you need. Isn't that something? Susie Omer said this. You guys heard of her. She said this about reverse mortgage. She said that reverse mortgage is a better option. Her reason is as follows. The heirs will have a better chance of recuperating the lost value of stock over the years, since the stock market recovered faster than the real estate market. That sounds like a contradiction to me. On one hand, you say there's a good thing, but on the other hand, you said, hey, you got a better chance playing the stock market, which I totally disagree with that. That's not true. Now, there are some alternative programs out there that you can choose from, and I'm not encouraging you to go do reverse mortgage, but it's just a tool that you can use if it fits your need. Some of the other alternative program is the traditional cash out refinance program. You can do that. Interest rate is is extremely low, so you can take advantage of that. You can do a second lien on your property is another option. You can sell your property and then maybe move to a cheaper property or a condo or rent an apartment. And you can even sell your property to one of your family members, so you can still keep it in the family. Remember that reverse mortgage, this product is designed to create retirement income from your home equity. It may not be the best solution for some of you. Okay? Another way to consider is private reverse mortgage. Another way that you can consider getting the extra money so you can be comfortable in your senior years. Maybe you got hurt, so you really can't do a lot of work, but you can be comfortable, bills paid, peace of mind, grass is going to be cut, upkeep on the property has been done, homeowners insurance paid in advance, mortgage protection insurance paid in advance, taxes in your bank waiting for it to be due so it can be paid on time, and every month you constantly put money into your own personal escrow account to cover those costs. Man, you are indeed an educated consumer, the best customer, because you knew that discipline is what it takes to get this job done. So the other way for reverse mortgage is called a private reverse mortgage. Now, what is that? Well, a private reverse mortgage works like the reverse mortgage program, except the interest and the fees stay in the family. Follow me on this now. I didn't lose you, so stay with me. Your children make regular payments to you. And when it's time to sell the house, they recuperate their contribution and the interest that they charge you when they gave you this money up front. The property paid for itself. You live your good life. And now the home, through your will, is left to whoever you choose to have it to be left to, but it be left to the siblings that did the loan to you. So now they can sell the property and recuperate their money. Or even keep it if that's what they want to do. So, although it's not free to set up this type of arrangement, this private reverse mortgage, it is typically much cheaper than getting a reverse mortgage through a bank. The home remains an asset for you and your children. The bottom line here is that reverse mortgage may be a good option for people who are house rich in equity and cash poor in the bank with lots of home equity but not enough income for retirement. Remember, reverse mortgage may be less expensive than the other home equity loan program. How long is the question is going to be asked? How long? How long does reverse mortgage last? It lasts 25 years. That is the term is used for reverse mortgage. The interest rate will be somewhere between 5% or a little less. And you can't only start reverse mortgage if you're age 62 or older. But the term will be 25 years. And they normally take 50% of your equity unless they need to go 60 to do it. And an adjustment is made just to pay off the house and to secure the fact that you can have some money out of that deal to be paid. And so they'll go that higher percentage for you. Okay? Will reverse mortgage affect my pension, Rick? That's my deep concern. Answer to that question is no, it will not affect your Social Security benefits, nor would it affect your pension, nor do you have to even report it. And if you feel like you want to report it because honesty is the best policy, it still would not affect your pension. You'll get your full pension. Even though your reverse mortgage payment is larger than your pension and larger than your Social Security, you still do not pay taxes. Isn't that beautiful? So you don't pay taxes on that money. And it does not affect your Social Security benefits or your pension or your husband's pension or your husband's Social Security benefit in case he passed away and you're getting it. Or he's alive and both of y'all are getting a pension. No, it does not affect either one of you all. Okay? So, taking out a reverse mortgage does not generally make you ineligible for a pension or Social Security. You need to take care as a central link does impose conditions on any payments or income test, but generally the amount drawn down under reverse mortgage is not counted as income by Centerlink. And Centerlink handles pensions and things. The money count down under reverse mortgage is not counted as income. That's the key factor there. Who owns the home in reverse mortgage? Reverse mortgage is a rising debt, falling equity loans, because it's eating it up as it goes down. Since you are taking money out of your home based off your equity, and since you are not making any payments but receiving payments, the balance goes up because you're receiving payments, and your equity goes down, but you own the home. The reason why that you don't pay taxes and the reason why that it does not affect your pension and your Social Security is because it is considered a loan proceed, not income. It's considered to be a loan proceed, not income. So do you pay income tax on this reverse mortgage? No. Reverse mortgage payments aren't taxable. Reverse mortgage payments are considered loan proceeds, not income. The lender pays you, the borrower, the loan proceeds, either in one lump sum, as I mentioned earlier, in a monthly advance, in a line of credit, or all above. At once. You can choose how you want it, okay? You can get a line of credit established whenever you may need $3, $4, $5,000. You got it at your disposal. But you're on a monthly payment plan with them. But you exercise the right for all three. Not just one, but for all three at your disposal. At your disposal, you can get a lump sum. Maybe there's a debt that popped up and you want to get rid of it. Or a debt for your child and you want to get rid of that. So you can go and say, here, give me this lump right now, and you can get it and pay it off. And now you move on, still receiving your monthly intake that doesn't go down. Or you can exercise your right to write a check within that line in credit to just pay it off. And you can do that and still be comfortable because you know what your balance is, okay? So, with this done, what are the three types of reverse mortgage? I'm glad you asked that because there are three types of reverse mortgage. There's a single proposed reverse mortgage offer by some states and local government agencies as well as nonprofit. It's called a single proposed reverse mortgage offered by some states and local government agencies and non-for-profit agency. The second is the proprietary reverse mortgage, which is what I talked about, private reverse mortgage, where your children will be your bank. They have enough money and they will give you the money for the collateral from the house. Okay? And that's called the private reverse mortgage loan. Okay? Then, last but not least, there's a federal insured reverse mortgage loan, which what we're talking about, FHA, Federal Housing Authority, under the reverse mortgage program that they created that falls up under the home equity conversion mortgage. That is a federal reverse mortgage program. How much do I need in equity for my reverse mortgage? How much do I need in equity for my reverse mortgage? I'm glad you asked that question. 50%. 50% of your equity should be enough to cover your needs and pay off the home under the reverse mortgage. And if 50% is not enough and they need to move the LTV, loan to value, up a little bit, they can. They can move it up a little bit. Okay? So reverse mortgage, it normally takes 50% of the equity. What is a catch with equity release? Listen to what I'm about to tell you. What is the catch with equity release? Well, equity release plan provides you with a cash lump sum or a regular income. The catch is that that money release will need to be repaid when you pass away or move into a long-term living facility. So you hear people use that kind of terminology in referring to reverse mortgage. Well, that's it for us. I hope that you really have a much, much better understanding of reverse mortgage. Just go to blogtalkradio.com/mortgage talk 1 and listen to the reverse mortgage program that I talked about, and then come back and listen to reverse mortgage 2. It should give you a much rounder understanding about what we were talking about and a better clarity. But we encourage you to go out and do further research. You can go on FHA website to learn more about reverse mortgage, or HUD website to learn. And you can easily get information on reverse mortgage. Certain companies will send you out information and videos on it. Or you can call my office at 708-572-7855, 708-572-7855, and say, Rick, can you send me out some information on reverse mortgage? And I'll do that for you. Okay. You can even ask me questions on it. You can email me any questions you may have just by going to Mortgage Talk 1, the number 1 symbol, at gmail.com and send it to me. Or you even go to Mortgage Talk Facebook page by going to www.facebook.com/Rick Montgomery, MONTGOMERY /370-177, and that's Mortgage Talk Facebook page. Help me blow it up. Like mine's been blown up, 5,000 max. And now over 200 wants to join me every day, and now they can follow my Facebook page, but I'm encouraging them to go over to Mortgage Talk and join them. Help me get 5,000 on Mortgage Talk Facebook page. Because remember, Mortgage Talk is under the umbrella of Information Center, where we give you nothing but the facts within the facts, none of our own personal opinion, but just the facts. And you know where Information Center is. It is the library, or even your own private library, where information flows abundantly. That's Information Center. We appreciate you listening to Mortgage Talk. I thank you so much. You can watch me on HAPP, HAPP TV. Yep, I'm on there. YouTube, I think they're going to let me back on YouTube. They kind of blocked me a little bit, and I didn't understand why. Because we're part of WHP NN Radio Network, and they thought a couple of songs on there probably should have been played, but the rights were there to play them. It was public songs, so you could play them. And so that automatically hurt us here. But we should be open now to be on there. And so we are on there on the radio wise. You can hear, but a lot of people don't want to hear radio when they listen to YouTube. They want to see you. And so we have our channel, and now you can see us on YouTube. Man, we're glad about that. Thank you so much. We also are on Periscope. That's going to end on March the 31st at the end of this month. So then we'll be on Twitter, live on Twitter. We will be doing live on Instagram. And yes, you can see us live on our Facebook page, on Mortgage Talk Facebook page, and even on my own Facebook page. Man, now, been blessed. Man, we got a wonderful Facebook page. Hey, Facebook, love you out there. On my personal Facebook page, you guys are wonderful. I mean, you guys are just awesome. And on Mortgage Talk Facebook page, you guys are good too. It's like, it's night and day, different people, a whole new different atmosphere, a whole new different comments that are made, but all positive. Man, you know, different walks of life of people, even on my personal, and different walks of life of people, even on Mortgage Talk Facebook page. Don't forget WHP NN Radio Network has a Facebook page too. So you can go and join us on WHPN Radio Network Facebook. But let's blow up Mortgage Talk. Then we'll go blow up WHP NN Radio Network. But I got to put it out there so you can go visit them too. Don't forget Jason Starr is on there. And so he makes some interesting but very good, controversial, not all the time, but good comments on WHP NN Radio Network. Okay? Well, that's it for us here on Mortgage Talk on Speaker.com, as we encourage you to download the icon of Speaker.com and listen to us and listen to all the good stuff that's on Speaker.com. Club Saturday night, Friday night jams. Man, listen to them. Thank you for listening so much to Mortgage Talk. God bless you so much. May forever keep you. And we'll see you again on Mortgage Talk right here on Speaker, baby. Speaker.com and iHeartRadio.
Thank you for listening to Mortgage Talk. I hope this information is something that you can use for your mortgage needs. Remember to tune in next week at the same time for more Mortgage Talk. God bless you.
That you've done for me. I want to thank you for taking good care of me. Thank you for all that you mean to